Welcome to this week's live ASX strategy session. Thanks for joining me. Great to have you with me for another day of going through, looking at the charts, working out the possibilities, and thinking about where these markets could be heading. Lots of interesting things to talk about with the ASX 200, also the commodities, copper, gold, oil, and uranium. A couple of stocks I want to talk to you about a little bit later on, and of course your questions at the end and the stocks you're interested in having a look at. We'll go through as well. Now, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, I think it's time we jump straight into those charts. So, first chart is the ASX 200. And what a difference a week can make. At the end of last week, many people were bracing for the worst. Talk of recession, those sort of fears started to spike, and a lot of people thought there was going to be a continuing unraveling of the markets. This week, much of that fear has subsided, and the market has erased around 2/3 of the losses. So we had 3 days down, and those last 2 days, well, those losses have now been erased. So is the worst behind us, and was this all just an unpleasant but short-lived correction, or is something bigger just starting to work its way up? That's what I want to look at now. I want to go over the charts. I want to have a look at some of the possibilities, some of the things to look for, some of the things to think about. The key message last week, when we did last week's video, the key message was not to panic. We've seen rapid reversals before, and we will see them again. There's no doubt about it. These swift sell-offs, they're hard. You know, you get a sharp fall in the market. It's an emotionally challenging experience to sit through with a stock portfolio, and a lot of people can't. A lot of people do panic. But if you're going to invest in the stock market, if you want to be involved on an individual stock basis, these unpleasant episodes, it all comes with the territory. It's what we sign up for when we say, look, we want to trade and invest in individual stocks. Even market ETFs, you're still going to get the sharp pullbacks. It all comes with being in the stock market. And that's why we have strategies that help manage these situations when they happen, so that we're not the ones panicking at the low, but we have plans and processes dealing with them. Now, last week we looked at some similar sell-offs from over the last decade or so. Let's quickly go back to them because they're relevant today to come back and revisit. So we had these three past periods, and the thing with the past, thing with going back and looking at how chart patterns have played out in the past, it's not going to tell us what is going to happen this time, but it can provide us with a useful overlay for what's possible. And if we understand what's possible, if we understand some of the possibilities, well, then I think that then helps put us in a better headspace to manage a portfolio and avoid acting out of fear. Avoid acting out of fear when many others are purely basing their decisions on that emotion. So, looking at these past examples, they provide a good backdrop for avoiding panic. So, markets that quickly sell off from all-time highs. This won't happen every time, but it does happen. I think it's fair to say most of the time, the vast majority of times, when you get a market that quickly goes from an all-time high to a panic sell-off, often what we find is that there will be a rebound back towards the moving averages. And it's that strength of the rebound that can tell us a lot about what's going to happen next. So the latest rally we've been getting in the ASX 200, it looks a lot like this one here from 2018. It also has a lot of similarities with this other one from 2014, all-time high, panic sell-off, about 10% down, similar sort of magnitude to current times. and then you got that sharp V shape rally. So they look quite similar from that respect. And a V-shaped recovery and they've had that V-shaped recovery where they quickly come back to the moving averages. And what that indicates, what it indicates when you get that V-shaped recovery and the quick rebound, it shows that there's strong buying underpinning the market. And that's something we want to see if a bullish structure is to remain in place. We want to see that strong rebound, that strong interest in buying the dip. The other notable thing that I think that the strong rebound does, we'll just go back. Let's just jump back to the present day. I think the other thing that that this strong rebound does, I think it neutralizes the sell cycle, and it shows that the overwhelming interest at this point remains buying the dip, not selling the rally. And that's an important thing. It's when the structure of the market changes that markets become vulnerable. So a market becomes vulnerable when it falls, and then as it starts to rebound, the rebound's met with selling. There's distribution, there's selling into the rally. And that's when the structure starts to change, and you get a lackluster rally below the moving averages. And then from there, it opens a pathway to potentially lower levels, and you get the structure change from buy the dip to sell the rally. That's not what we currently have at the moment. We've got very much interest in buying that dip. So the fact we've got a vigorous rally, I think a vigorous rally that's recouped most of those losses from those 3 days of selling. That's an encouraging situation to have. So, having said that, does that mean we should be looking at new all-time highs anytime in the near term? Of course, that's possible, but I think the odds favour we're going to see more consolidation between the high and the recent low. Looking at those past examples, let's just quickly duck back to the 2018 and 2014 examples. Like, look how this played out. A sharp decline, the V-shaped rally, but then the rally stalled, and there was more consolidation within a broader range before prices ultimately moved higher. They moved lower after that, but that's not where we are at the moment. We're looking for like how this period resolves. Then looking at the this period again from the 2014 example. There's a V-shaped rally, and then there's more consolidation before prices can then move on to all-time highs. So it's not a case of looking for an immediate resumption of the prior trend, but just, I think this is I think there's a good likelihood we do see this further consolidation before then. We potentially look at higher levels later in the year. Last week I spoke about de-risking a portfolio. So rather than panic selling on a steep decline, it was more about, I spoke about using a potential rally as an opportunity to clean out some of the weaker stocks in the portfolio, maybe selling some stocks that had hit exits, and possibly even taking some partial profits on big gains. And that's what I've done through the week. I have lightened my portfolio a little, as I'm still overwhelmingly long, but I have trimmed it back. I have just tapped it back a bit and used this rally as an opportunity to do so. Now, of course, this rally could continue to new all-time highs in the weeks ahead, and some people would then turn around and say, "Well, hey, I just should have held everything. I shouldn't have sold any of my stocks." And look, maybe that would be true. That probably would be true. But this is about managing risk. It's not about seeing who can be 100% right. Trading's not about. It's not about I'm 100% right or I'm 100% wrong. We're managing risks the whole way across the spectrum. So sometimes we want to tap the accelerator a bit, put on a bit more risk. Other times we want to just tap the brakes a bit and just pull it back. And I think with uncertainty running high as it currently is, volatility spiked and it's moving a lot in both directions. I'm happy just to tap it back a little bit. I'm still, as I say, I'm still significantly long stocks, but I'm also holding a bit more cash and being a bit slower to buy. I think there's still a good chance we get some more volatility, especially if this possibility of a range develops. Like there's quite a bit of room for the market to move if it were to move within a range. So there is that possibility there. If we start seeing more bullish setups in the current week, when we go through the individual stocks, if more stocks are lining up and compressing into their moving averages, starting to rebound, we get those bullish setups, then that's great. I'm happy to put more cash into the market. But at the moment, I'm happy to keep a significant exposure, but just pull that risk back a touch. At this stage, the overall structure, it has certainly not turned bearish, but sharp declines, as we've had, they do technical damage, and it often takes time to repair that damage. So I think this is very much a case of let's keep a cool head and watch how this price action develops over the next several weeks to continue to firm up what the overall situation is. But at this point, the underlying trend, it does remain up. It hasn't flipped to a bearish setup at this point. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. It just tells YouTube you're watching. YouTube shows other people. Helps me heaps. Please do that. Also, short comment, like, click that subscribe button if you haven't already done so. Really good if you could do that, please. And now, of course, that wraps up the free section. If you're not a strategy session member, lots more really interesting things to go through. Go into the small ordinaries next, and we've got all the commodities, got some stocks, individual stocks to look at. If you want to come on in, there's a link below. Click that, costs very little, and hopefully you get a whole heap of value for what you chip in to make it all happen. Okay, so let's go to the small ordinary.